Ladies and gentlemen, open banking pioneers, a big warm welcome. I am so pleased you've joined us today around our campfire. And what a terrific week we have all had. Innovate Finance Global Summit. Janine and her team did us proud. And then the JROC report, UK FinTech Week, and now to cap it all off, today's campfire. Now, over the course of the last few days, I've spoken to people at UK FinTech Week from over 30 countries around the world. And they're looking at the UK for its combination of talent, regulation, infrastructure. And it's clear that the UK is the place for FinTech right now. And that open banking is a major driver for that. And why is this? So, well, I believe that with open banking launching in the UK in 2018, tech firms have had 5 years to build the tech systems, the processes, the skills that we need to process at scale, whether that be transaction data, importantly, managing consumer data safely and integrate with incumbent financial institutions. Now, they've all delivered these successfully, and as a consequence, we can de-risk the process of doing so again. And that is why people look to the UK, and no other country can match our credentials right now. We also have to be humbled and look to others. But one of the big questions that I was being asked over the last 3 or 4 days was, what are you doing on VRP? And they're wanting to learn from the UK. Now, Monday was JROC Day. The JROC report was much awaited, and that injected even more momentum, and that's a word you're going to hear a lot today, momentum, into our sector, giving us clear vision of a sustainable future for open banking. And it's a real statement, I believe, an ambition around open banking and open banking payments in particular. Now, we're going to be talking more about the JROC report, but it, at a headline level, it's got 6 key themes and a very clear timetable that's set out over 2 years. And at the cutting edge of all that is variable recurring payments, VRPs as we affectionately call them. So what are VRPs? Well, they give people the ability to provide ongoing consent, that's the important word, to merchants to take payments that might change. The easiest thing to think about is payment of a phone bill. Now, they are exciting, particularly in light of the JROC report, with the potential even to have a huge impact on retailers. But the fact is that right now, there's still real challenges to delivering VRPs at scale, that word I talked about at the top, at scale in the UK. Now, the commercial model, we still need to work through that. We want to talk about the risk and liability frameworks that still are being created bilaterally, and there's still some ambiguity and work to be done around customer protection. But let me just put some real context. We're only 5 years into a new payment type, 5 years in. So of course, we still need to be having these big conversations. And despite all of this, there's a huge enthusiasm in the industry to make it happen. And in FinTech, we're innovative, we're collaborative, and that's a theme we're going to be talking about on our panel. And we will work through these conversations. So in our panel today, we're going to be talking about how do we get there, and looking at some of the big questions that will help us on that journey. How can we help define the challenges and build a plan to tackle them? Now, we've got players, and it's quite a large panel. I make no apologies for that. But we've got some key players from all 4 corners of the ecosystem. We've got banks, we've got tech firms, supervisory bodies, and regulators. And if anybody can help us course even charter a course is what I'm trying to say, through these waters, it's them. Now, it's these types of conversations, some in public, and others which we convene with a little bit more privacy behind the scenes, that will create a new infrastructure that we need to operate payments at scale to create this more market momentum. Now, momentum is a word I've said that you're going to hear a lot about. Now, I had a fireside chat with Marion King, OBE's trustee, on the very day that JROC report was released. So it was hot off the press for everybody at Innovate Finance Global Summit. Now, Mariam was authentic and she was transparent, and the words that she kept using were exciting momentum. So we agreed that as an industry, we've got a lot to do, a lot of work to do. So, as I said then, I'll say again now, it's time that we lace up our trainers. Now, normally at this stage, I'd be handing over to a journalist. And in the 4 years that we've been hosting campfires that are seen now around the world, 40 different countries will be watching this. I've never hosted one myself. I'm privileged to get to be asked to host others and flown around the world to speak. So this is a first for me. Well, you know, why? Well, I truly believe we are starting a new chapter, and it's a very exciting change. So I can think of nobody better to kick off our campfire than for me to have a fireside chat with Raphael. Raphael, have you got your trainers laced up?
Yes. At least 18 months we have our trainers laced up.
Yeah, I am delighted that you have joined us today. Let me introduce you properly. So you work for NatWest, okay? You are the bank that is leading the way on VRPs, and you are their senior API commercialization manager, okay? So what I would like to do, Rafe, with the 15 minutes that we've got together, is I'd like us to talk about, at a high level, what you're doing in VRPs, and then I want to get under the bonnet. So in terms of setting the scene for everybody, if we may, okay, we spoke to you earlier in the year about VRPs, but what is your proposition, and you know, what's moved on since then? Paint the picture, please.
Yes, a good question. So I guess, first of all, I would say for us, not just VRP, but account-to-account payment is a strategic part of our payment proposition. So I mean, we went through a review in terms of how we see payment evolving. So for us, for NatWest, account-to-account is something that is strategically relevant. So I think this is an important point, because this give us more power to do what we want to do in the account-to-account space, specifically on VRP. In terms of what we have done over the last over the first quarter of the year, I would say good progress. Overall, I guess, you know, we are live with a bunch of use cases in terms of VRP. So we are demonstrating it. I mean, this can work, and we have also done some good progress in terms of our bilateral agreements, so the contractuals that we need to have with PISP, as well as liability model that we are enforcing within those contracts, and start to create an initial dispute process. Most important, yeah.
I want to talk a little bit more around the bilateral agreements in a moment, but sort of at a high level, do you want to just paint some pictures of the use cases you're seeing for our audience?
Use cases are quite broad, so I guess definitely there is a lot in terms of charity donation. That's one, but a lot of traction is on the card on file. So anything that can be using VRP as an alternative to card on file is becoming more and more relevant. And on that space, again, that's probably the important point. We are in conversation with via a couple of PISP. We are in conversation with a couple of large merchants. And again, what a good 2023 would like for me is if we can eventually create a TFL moment in which we can announce a large merchant using VRP, which I think this can accelerate and create even more momentum on the back of all those JROC conversations.
That's a great segue to talk about JROC, because it did explicitly, probably the first time that I've ever seen it anyway, did explicitly, you know, lay out an ambition, a real ambition for open banking payments, retail payments, and then you've got that emphasis on VRP. So what are your early stage reactions? It only came out on Monday. Everybody is reading it, digesting it. So within those sort of guardrails, what are your first reactions of the JROC report, particularly around VRP and the MVP for multilateral agreements?
Yeah. Well, overall, I guess, overall positive feedback. So again, is something that, by the way, was something that we were expecting something to move in that direction, but overall positive. I think there is a lot. So I think there are probably some more than 20, 29, 30 items that need to be unlocked over 2 years. So I guess, to me, we need to be quite programmatic on how we are going to tackle all of those, because again, there is a risk to open a never-ending conversation. So I think we need to be very, very focused on how we are going to tackling all those points. I think I'm also quite happy on the point about sustainable commercial model, because I guess to make open banking attractive for financial institutions, a reward is needed. And with a reward, the financial institution can make sure that there are top-class API, top-class data are provided. So to me, that's also quite an important point. A little bit less happy on the fact that the commercial angle is a stress mainly on VRP, because I think there is something more in terms of VRP, so something around digital ID. There are more and more propositions that can be potential for commercialization, I would say.
See, that's interesting. So I at the top of the Campfire, I said there were 6 key themes, and each one has, there's a theme, an action, an owner, and a delivery date. Okay, and they are, tight delivery dates. We do need to lace up our trainers. But one that I really smiled when I saw, and that's publish a discussion paper on to your point, on the principles for commercialization frameworks around premium APIs. So to me, that's going to be a game changer for a sustainable commercial model. And that's, got to be part of this bigger conversation, hasn't it? Yeah, it can't be to the bottom all the time.
Agreed. But I think that's the fundamental. To me, that's the elephant in the room. So I mean, if there is a commercial model linked to open banking, then conversation. So bringing other financial institutions on our journey in terms of being more proactive in terms of open banking will be awfully easier. So I think that's one point. The other one, Helen, is around on VRP. I guess the point around the liability model, I think that's also an important one. I think probably 2024 as a target date is probably too late. So I guess we need to start to mobilize a little bit earlier, and I think probably we need to start to think on how can we deliver something earlier and over time refine. So I guess probably a coalition of willing between future-looking financial organization and PISP is probably required to start to accelerate the process on liability.
You see, Rav, I said it was the first time I've ever hosted at one of our campfires, because it's not the Helen show, and I genuinely like to pass the mic and to a female wherever I can. But to me, it's we talk about a multilateral agreement, and maybe we should talk about the component parts of that multilateral agreement. What is a risk and liability model? So for our audience that aren't born knowing this, okay, what is a risk and liability model? I know because I am the founder and former chief executive of a card issuer. But to others that are new to what is a growing industry, do we want to unpack that a bit?
Yeah, in terms of what is in a very simplistic term, to me is so we are VRP is a payment method that by definition is a payment method without a scheme. So in simple terms, we all know, every one of us has an opinion on the scheme, but I think one point that we should agree on the scheme is that they are great on providing a industry-wide rule book in terms of if something goes wrong with a payment solution. So if there is an unhappy path, how those kind of unhappy paths are going to be managed, how those kind of unhappy paths are going to be treated. So if something goes wrong with a payment, who's liable for what, and what is the process? So I guess those to me are fundamental points that we need to have in place to make the end user of VRP, the customer, comfortable of using a new payment method. Because I guess a payment method without liability, customer protection, and dispute, as we can imagine, is a payment method that will have a less chance of success, because customers are going to be not so comfortable, and therefore, we will have a gap in terms of adoption.
In any regulated environment, every payment method needs to have that customer protection, and that is the regulators' responsibility and duty. So I'm looking forward to hearing more from the PSR later in the panel. But you've worked with TrueLayer. We have Jana on a framework model around this. Do we want to literally just position that to give her some time to talk about it later?
We have been working with TrueLayer since, and also with other, to be honest, also with other 6 PISP since the early days of VRP, even if they're still quite early days of VRP. So we had some commercial, we had a commercial agreement in place, but again, we had also good conversation with Jan and with Jack in terms of trying to think together on what should look like a good framework in terms of customer protection. To be honest with you, what has been presented this week is pretty much mostly aligned with our view. There are some points of misalignment, but I guess that's part of the game. I think 80% we are there, we are aligned, and I think to me is a useful starting point to start to trigger those conversations we need to have with all the other players involved in VRP to start to build together how customer protection should look like.
It is part of a bigger conversation. And back just to a point that you made, NatWest are leading the way. And I know you've done a lot of work with somebody else we have on the panel. We've got Tom from Go Cardless, and you mentioned the charity use case. There is, and we will send this piece of VT out as well. There is a great clip that we did with NatWest, Charity First, I think they were called, and Go Cardless. So we'll make sure that gets some more airtime as well. Just want to move on to another part of the JROC report, if I may, and that was they talked a great deal about improving the collection of data in relation to fraud. Okay, so we've talked about risk and liability models, so naturally, the conversation flows onto fraud. What is your thinking on this? What work have you done, and particularly what work have you done with TPPs in this area?
I think we are working with TPP in this area, and again, we're also part of those OBE conversation around fraud. But probably I will divert a little bit here. But I think for me, when it comes to data and when it comes to VRP, I will probably go to the very, very, very basics here. So I guess again, in my opinion, for a payment method to be as seamless as possible, is required for this payment method to surface to the customer what is the merchant name. And I think at the moment, those kind of information are not available into VRP. So again, if I look at our customer, if I look also all the call that our call center are receiving in relation to payments are pretty much coming because a customer doesn't recognize that transaction because it's not easily recognizable, the merchant name. So I think that's for sure one element that will make this proposition more and more useful. The other one can be also the payment type. So again, VRP is a faster payment, but if we are thinking VRP as a payment proposition that will be premium in terms of customer protection compared to other kind of faster payment, a way for our call center, for our back office to spot that transaction is VRP in an instant is quite important, because this then will connect with the point around building a liability and dispute model, because we can build a dispute model that is more straightforward. So I would say, in terms of data, there is a lot we can do and we can do better, but I don't think we need to reinvent the wheel. So I think if we look what good looks like in terms of card, that will give us a good benchmark to start to think of where to start to help us to understand what we need to look to.
So to start some really big conversations that allow us to be ambitious and to build at scale. So my last question before we widen it out to the panel, inspire us now. When we meet again this time next year, okay, so in a year's time, what will we be talking about? Where would you like us to be?
I would like to be in pretty much. I think collaboration to me is the key word. Where collaboration means that coalition of willing to start to not write just big and lengthy reports, but to write in clear indications. So let's be in a room with a couple of banks, not all the bank, if the other don't want to do this, and to start to agree, and another PSP to start to agree how liability and dispute should look like. So that's one, collaboration on that side. Collaboration also with some future-looking merchants that are willing to go live with us and create the TFL moment. Because again, appreciate we have just a portion of the total market share, but we have a few million customers. So the reach of VRP and NatWest can be far bigger than what we conceive from in terms of reach of other payment solutions. So there are payment solutions that are available on all the checkout page, and they only have a reach of 3 million customers. We are definitely bigger in terms of numbers. So I think collaboration.
So, and NatWest can create that be an instrumental part in creating that much needed market momentum that we've been talking about. Raf, it's been an absolute pleasure. You've talked a lot about collaboration, you've handed me a beautiful segue to introduce the rest of your panelists. Thank you very, very much for what has been a masterclass, and you've perfectly set the scene for a very big conversation. Don't go anywhere because you are part of this panel. Let me very quickly introduce the panel. Now the audience can see all of their bios at the bottom of the screen, but you've got Alan Ainsworth, Strategy and Policy Director of OBE, Dawn Beebe, who is a Sales Director and Open Banking Specialist at NeuroPay, and Jana Reed, the Global Head of Commercial Banking API Partnerships at Trulay, and we already have given her framework agreement a little bit of a plug and positioned that, talk about that later. And Jeroen, who is the Policy Manager at the PSR, and Tom Burton, the External Affairs and Policy Director at Go Cardless. Wow, okay, we have an esteemed panel. So let's jump straight in, if I may. Okay, I would like to kick off this conversation and really get under the bonnet. Monday, it was JROC Day, okay, that much awaited report. Now, it explicitly laid out some real ambition for open banking payments competing with the card rails. I want to look at, and Raf beautifully positioned this, but I want to look at it in a little bit more detail, the role that VRPs will have on this. And I think it's only fitting that we start with Jeroen from the PSR. Please paint the scene on that and, kick us off with the role that VRPs are to have in this new world.
Yeah, of course, can do. Thanks, Helen, and good to be here. So from our perspective, just to give you kind of a sense of the overarching vision first of this JROC recommendation that came out, really at a very high level, what we are setting out in that report is that we really want to move open banking from its current phase into a next phase that focuses much more on putting it on economically sustainable footing. Now, to do that, what we want to do is leverage new functionality so that it can drive further innovation in the sector. But to do that, a number of things need to hold true. For payments, we want to work towards building open banking up so it can be that competitor against other payment methods, including cards. There's three things that you need to get there. You need the functionality that you need to actually make that payment, and that's where VRP can really come in. But you also need the two other elements that Raphael already touched on. So you will need clear principles around what happens when something goes wrong with that payment, who's liable, who do you speak to get your money back, and you will need clear principles around how you can price for the products that people are using, and whether or not the question there then is, does that incentivize further innovation and further investment in that product so it can continue to improve and meet changing needs? That's really the ambition. Because VRP is already existing functionality in the market, although somewhat limited to me-to-me payments at the moment. What we want to do with VRP is really test that idea of encapsulating pricing, liability protection, and functionality principles into a singular agreement by using VRP to test whether or not we can then widen that out to retail payments over account to account more generally. And we want to do that quite quickly. So the JROC report itself sets out that JROC members will publish a terms of reference for a working group really looking into these topics this quarter, for that working group then to come back to the Joint Regulatory Oversight Committee by the end of Q3 this year with a proposal for how VRP could be rolled out, and this can start becoming a reality.
Yeah, for those of the audience that haven't read the JROC report, we will be sharing it on our LinkedIn. We already have done, and we've written a blog about it this week. But to your point, there are some very, very clear time frames. So how will VRPs really compete with on the card rails? Is there anything more that you want to add there before we widen it out to everybody else?
Really, I think the best way to describe that is that we have an opportunity at the moment with open banking, really to look at the functionality that is in place, and the functionality that will come in through VRP, to look at the types of use cases that it can be used for. Retail payments and purchases is a particular focus for the PSR because of its strategy, which was published last year, in which we call out that effectively one of our 5-year-long strategic goals is to look at increasing the competition between different types of payment methods, so that it can help spur further innovation and keep prices for those that pay for payments at the moment efficient and related to cost. And open banking and account to account more widely can really help drive that delivery of our strategic goal.
It certainly does, which is a fabulous opportunity to include Alan now in the conversation. Alan, first of all, your initial impressions of the JROC report, and also the role that VRP is going to have in creating this competition to card rail payments, please.
Yeah, so I mean, we're really delighted with the JROC report. I think clearly there's a mixture of it's amazing, but there's also a bit of trepidation. There's a great deal to do in a small amount of time, and there's a number of those 29 actions that have got OBE's name against them. So we're really in planning mode at the moment. We're working out how we do it, who does it, etc., etc. But we're really trying to hit the ground running. And Raf mentioned earlier that we've already got work going on around financial crime, which we did under the order because it's clearly an order related item, but I think it has wider applicability for the whole ecosystem. So, we're not waiting for people to create terms of reference. We're really starting that work now because we have some of those actions to be delivered in Q2. So lots of work going on and really exciting work. And I think it builds on the strategic working group that did a lot of work at the back end of last year And I think what's really good is it's listened to ecosystem participants and other stakeholders. And it's not, it's not a list of things that are going to happen long time in the future. It's got some things that can happen immediately, and some things that will take a little bit more time to work through. And multilateral agreements, to the point around VRPs, a lot of the content of the SWG report said, if this is going to be non-regulatory and sustainable, you need to have a way to bring everybody together and collaborate, but similar rules around this. How do you get to that? And the answer usually is some form of agreement that everyone is comfortable with. So a consumer knows if something goes wrong, how it's going to be sorted out, whether they bank with NatWest or any other bank, and whether they use one TPP or another. So what is the common areas of agreement for VRPs in the UK economy, and where does it fit? So I think also the other thing I mentioned in relation to VRPs in the report is that I'm just looking at the 5 themes at the moment, and a lot of those 5 themes overlap with elements that we've talked about that are essential for VRPs. One element is mitigating the risks of financial crime. We need to keep fraud down, clearly, and within the VRP construct, we need to make sure fraud is not a problem and doesn't create additional friction for users. The whole point of VRP, or one of the points of VRP, it is a relatively low friction way to pay. The other is there's consumer protection is one of the big 5 themes. So again, that's in there too, and information flows between organizations and end users. Again, that's important for VRPs. If something doesn't work, people need to know, the PISP needs to know, and the consumer, to Raf's point around knowing, which merchant they've been using when they see that item on their statement, they need to know that. They need to be able to look at their dashboards and see VRPs alongside direct debit. So totally agree with Raf. But I think the good news is that things do overlap. There's a good jigsaw puzzle that's been created here, which I think can really help with VRPs. And it's not all left to the VRP working group, which is good news in and of itself.
And it is a very aggressive timeframe as well. I've got it in front of me, without reading it all out. We've got the FCA and the PSR. I've got a huge amount. Talking about lacing up your trainers, they need to be fueling up. You've got a lot of work to do, your own. And, a lot of it this quarter 3 and quarter 4 of this year. And there is, you've got this VRP working group, which I am particularly excited about, to Alan's point, around, collaboration. Do you have any comments on that?
I would say all of us have our work cut out.
Yeah.
For us. There's quite a few actions that we ascribe to ourselves, because we're really, really wanting to drive this momentum and keep it going. We've published the report now. It's really important that it doesn't stop there, but we can't, as a regulatory community, deliver this by ourselves. What we really need is everyone in the ecosystem to pull from the same sheet and move towards the same direction. And so for all of the 29 activities that are prescribed, really what we're looking for is very close collaboration with the ASPSPs, the TPP community, consumer representatives, business representatives, the OBE, the subsequent future entity, and other actors like Pay.UK to really help us lift the lid on some of the problems and start fixing them
collaboratively, which is a good opportunity now to bring Jana into the conversation. Jana, Rafe and I talked about your framework model. Do you want to give us a little bit of insight into that? But in particular, your reflections on the JROT report, please.
Absolutely. Thank you, Helen. So glad to be here. So TrueLayer has published if you want, version 1 of how the liability and dispute framework can look like. And that is really, we have had a lot of conversations about liability and dispute frameworks. And I think it's important to say that when I attend the conferences, I hear a lot of people, even on panels, saying open banking and in particular VRP have no liabilities and dispute framework, the customers are not protected. And I think it's important to say they absolutely are, because in our framework with NatWest and in all of the other negotiations and all the contracts I've done with the other banks and I'm doing with the other banks, the framework is very much included. In fact, it takes about 70% of my time to think about what it can look like for a POC we're going to launch. So we have taken all the learnings we had from the conversations with the banks, with the merchants and with the regulators. And we put in together this report, which we coincidentally launched on Monday, which sets out the key principles. And what we are intending with this report is to really have serve as a starting point for the industry, so the regulators, banks, and the TPPs together agreeing these principles with where we are comfortable to launch a product. And from there, we really need to be learning by doing. So that's my key thing. I can talk about it a little bit more if you want, Helen, but these are the key things and key thinking around.
It's the key thinking, and please feel free to chip in as we go through, and we will be sharing it with everybody. But that's a great oversight. Thank you. Now, the questions are coming in thick and fast, so I did agree that we would sort of pause at little intervals throughout the campfire. So let's just have one of those pauses now. Raf, you can see the question here from one of the audience, don't have their name, but the question is, and let me read it out. Do those extra data points that you mentioned need to be added to the scope of the OBE standard, or can they be sorted out multilaterally by ASPSPs?
Well, I think either way. I think at the end of the day, so I'm quite agnostic on how we are going to solve. So I guess my point there is a gap, and we need to close that gap if we want to make customer comfortable. So I think definitely we can go also with, as part of multilateral agreement. I guess we need to probably go with the one that is the quickest option in terms to get it done. But yeah, as I said, I don't have a view on how to address, but the point that I want to make is something we need to address.
Okay, does anybody else want to chip in with that one?
Yeah, can I maybe chip in from the experience of how these things work? I think aiming for multilateral agreements and frameworks is very much what we should be doing, but how we get there is the key question. And practically, what I've observed over the last 2 years when I've been working in open banking and bringing VRP to market, the most practical and quick way is to solve it on the real use case for the real merchants with the real bank, and then share that learning across the industry to have it implemented.
Yeah, no, that is a brilliant, because what that does, it perfectly positions this next question, which I want to be a discussion point now for everybody. What are the panelists' views on the actual needs of VRP, and what will they solve for customers? So Dawn, I would like to widen that question out, but please, we will answer it. But, I want us now to look at how technology providers can avoid commoditization and build sustainable businesses around open banking payments. So really, that's about looking at the use case. It's always got to be about the use case. So please, what are you seeing, Dawn, in the market? Please share your insights.
Thank you, Helen. I guess I kind of want to bring this conversation back to the here and the now. The JROC report clearly sets out the stepping stones that we need to all work through in the next 2 years. But that's not going to help businesses today collect money. That's not going to help the consumer who is crying out for choice, crying out for visibility of those recurring commitments and the need for control of those commitments. And I think, when we're talking about earlier the commercial model that we all need to collaborate together to work towards, I think that and the liability is going to be the two most difficult subjects to come to a universal agreement on, because everyone's got their own agenda, particularly those ASPSPs, those banks that have an issuing arm. And there is no point in all of us putting all of our resources, energy and cost in delivering VRP solution for non-sweeping, if the banks are just going to set their cost base higher than interchange, and then you're not going to get adoption. So what we can do to help our customers right now is to look at the recurring payment methods that are most commonly used right now, and card on file is one of them, and you can't hide away from that. It has a high penetration and a high familiarity. Standing orders, because people, I'm sure, are used to making savings from their accounts into another account, and direct debit, which is inherently a bill type payment method. No doubt that VRP, when it comes out for the non-sweeping commercial use case, will be the strongest contender for disruption. But we've got to give customers choice now. We've got to give merchants choice now, and we have a duty of care to both those merchants and those consumers to be clear on what those liabilities are. And just so some of the use cases, I'm in sales, some of the daily conversations that I'm having with merchants are that that they need that help now. And take, for example, the property rental market. There is no trust in the relationship between a tenant and a landlord. There is a reluctancy for the tenant to hand over their cards, relinquish control of that card payment, because they don't want the landlord doing a sort of a recurring payment or a collection on that card. And the landlords also are concerned about the financial risk exposure they have to frauds, to some of those short-term rentals and multiple occupancy type rental agreements. So how can we help those businesses? And NuaPay and the likes of Go Cardless are turning the perception, and we're broadening the use case for direct debit. This is a well-established, robust, reliable bank-to-bank, account-to-account payment collection methods, and when you combine it with an open banking either PISP or ASP journey, you're delivering an authenticated mandate in a flow that can be signed up immediately on on somebody's phone. So there are an open banking PISP transaction will of course eradicate all risks for the merchant and the consumer, but there's the inconvenience of having to initiate that each time you want to collect rent or pay a quarterly ground maintenance, and so direct debit authenticated mandate can't be ignored. That is the solution right here and right now, that will directly compete against card on file. It reduces the landlord's risk, it improves the certainty of revenue for them, and going back to the duty of care to that consumer, they feel that they have visibility in their mobile banking app or their internet login. They've got visibility and somewhat control of that payment until VRP is here.
So Dawn, you've clearly shown that NuaPay and I can hear the passion, are putting the customer at the heart of everything you do, and that choice is absolutely key for you. Rafe, lots of points there. I would just like to bring you into the conversation. Ralph, what are your thoughts? Yeah, and then I want to knock off some of these questions because they're coming in thick and fast. Yeah,
I think I completely agree with what we said before. So I mean that's why we are live with few use cases on VRP, because I can think we have an opportunity. So there is a duty of care we have to our customer that we need to start to unlock now. So I guess to me the fundamental point is existing payment methods are not perfect. So VRP can help on closing those gaps, and therefore again we have a duty to start to deliver VRP now. I think in terms of avoiding commoditization, which was your original question, I guess, open banking has the power in which you can bring in one journey a payment solution as well as authentication of data, leveraging the underlying data. So I guess there is an opportunity for open banking to deliver not just a payment in terms of moving money between parties, but delivering an overall end-to-end payment experience. And one last point I want to make is, I guess, another opportunity I see for some of these the PISP to avoid commoditization between them, amongst them, is also having the ability to make the customer, but also the bank, comfortable that they can manage the unhappy path, unhappy journey seamlessly. So what I'm trying to say is PISP can start to win this market against other PISP if they can reassure bank that the way they're doing onboarding of their merchant is spot on, as well as the way they're going to manage dispute is seamless and fast, in order to deliver, let's say, a great experience to our customer.
And I know Jana wants to chip in, Jana, and then I want to come back, Raf, to answer one or two of these questions, if I may. Jana, go for it.
Thank you. I would like to kind of build on Dawn's point, and I think she's absolutely right. There are use cases today there are clients which are using direct debit who can benefit from open banking enhancement of those solutions, and they will be absolutely happy with it. The beauty of what we're discussing here today, that VRP is intended as an additional payment method, and it will find its space in the ecosystem where it will be the most used and the most useful to customers. What I've seen when I talk to clients and merchants around where is the most desire for something like VRP is to reflect what Jerome said at the beginning of the call is the retail, right? The replacement of card on file on e-commerce, subscriptions, digital subscriptions in particular is something where there's a huge appetite from merchants for this payment method, and where the customers can benefit the most. So I think these are, in terms of merchants, I think, and coming back to Dawn's point, it's important that we are looking at these use cases and we are pricing these use cases at the right price point to be competitive in the market. The second thing, I echo everything everyone said about the liability management framework. We need that. We need a path to that. And the third thing, I think it's very important in kind of bringing VRP to life, is that the ecosystem at some point needs to be comfortable with some sort of ambiguity, as in we need to put in place frameworks and protections. We need to put in place the reasons why merchants want this. But at some point, we need to kind of say, okay, now we know enough, let's do it, and let's learn by doing. And I think that's going to be the key critical point, which is going to spearhead this innovation.
Well, Raf, you're nodding, and if I may, I want to ask one of the, and they really are coming quite quickly. I want to ask one of the customer questions, and then if you could comment on what Jana said, and then I want to widen out the conversation and hear from Tom at Go Cardless. So the question here that I want to look at was, and they're stacking up actually, so I need to go back. It was the difference between multilateral and bilateral agreements. Somebody's asked for some clarification. I think maybe we could have made that clear at the top.
Yeah, I mean, the bilateral agreement is the one that, for example, NatWest, we signed last year 7 bilateral agreement with seven PISP. So it's pretty much a contract we have in place with a specific PISP. So there are 2 parties involved. Multilateral, again, I guess, is something that is more an industry-wide set of rules. It's like a sort of a rule book, an high level. It's an agreement between multiple parties. So the key benefit of moving to a multilateral agreement is that there is consistency in which banks are different. So in which the different banks are going to treat the VRP relationship with each party.
So more akin maybe to a card scheme, but we don't want to use the word scheme, and that's where
we don't want to.
We're
use
struggling,
that word.
isn't it, to find the words? Okay, I hear you.
It's a way to reach consistency.
Like a playbook, yeah. Okay, so here we go. I want to widen it out now, and we will be answering some more of these questions. is how does consumer protections differ between open banking payments and the card rails? Tom from Go Cardless, we haven't heard from you. Do you want to comment on that?
I'm happy to give it a quick comment. I mean, yeah, I think the fundamental differences here is there's no Section 75 chargeback protections in open banking as there are for cards. And I guess the other notable difference that we have with VRPs relative to a direct debit is there's no direct debit guarantee, but they do fundamentally different things. That's not to say that those methods need to be replicated in the VRP world. They're fundamentally different products, and I think I kind of agree with what I think Jana was saying before around there are protections already in place. There are rules around if there's an issue with the payment system, if there's an issue with the payment failing, who is responsible for that? And if there's an issue with the good, who is responsible for that? And those are detailed in the payment services regulations or in the Consumer Rights Act and related other consumer protection legislation and precedents that we have in the UK. So I do think that there's a number of different protections that are already in place, but there does need to be greater clarity and discussion about these issues so that people become comfortable with them. And I think then the next stage is, again, kind of, I'm sort of agreeing with Jana a lot here, that we just need to get on and do some of this. The JROC process has been great in some ways. It's fantastic to get this report, but this discussion has been going on for years. The JROC process itself has been going on for 12 months. We had the SWG process as well, and there's an awful lot of agreement around what needs to be done. And I think that the ambition that JROC has set out now is absolutely right. And you can totally see that there is a direction of travel here that needs to be followed through, but it is important to start doing as well. And, and actually it's worth kind of dwelling on what the minister said when he was talking about this in his speech on Monday, saying that he wants this year to be the year of action and of doing. If we set up this working group to look at these issues, I think that's fantastic. It's great that there's a deadline of Q3 to get this work done. The line that really interests me in the JROC report is let's also be doing this though by Q4 and not be sort of dwelling more on, getting the sort of full scheme in place in 2025. If we're doing that, then this is perhaps a very British thing to do, to be kicking it down the line through bureaucracy. But no, we should be getting cracking. There's the will to do this. We've all aligned around it, and it's important to start tackling these issues and to try doing it in a safe way. And I think there is now a path to doing that. Where we can focus on some of those sort of low-hanging fruit, perhaps low-risk opportunities for getting going.
So momentum is what you're saying, and I think I heard Andrew Griffith's speech as well. It was exceptional, and I would agree. If we just keep with the difference in between customer protection and move to, it's got to be one for the regulator. Jerome.
Yeah. Can do. I agreed with lots of what Tom said. There are protections in place already. I'm going to slyly dodge the direct comparison as well, but that's mainly because I don't think comparing things like that is always very useful. There are overall protections in place. I think what the JROC recommendations call out is that the operationalization of those protections within the open banking ecosystem can definitely do with some improvement. And that's really where we should focus in the short term. How do we make sure that there is a consistent approach to when something goes wrong, consumers and businesses know who to contact, and the process kicks in place and everyone knows how to act. That's key. There may be the need to do a gap analysis later then on whether or not the right protections are in place, but that should be driven by the use cases that are unlocked. Rather than a comparison between protections that are in place in other places. Agreed.
So, Alan, do you have anything to add to what Jeroen has just said?
I'm finding myself agreeing 100% with what Jana, Tom and Jeroen have said on this one. I mean, I think you know, what's interesting is the TrueLayer report talks about trying to simplify some of this stuff and start with principles. And if we can, as a community, get around those principles, and rather than trying to boil the ocean on this, get something that works and gets out there that we can then test in a safe environment. We need to work out how that looks so that it is a safe environment. So it doesn't mean everyone has to play, and it doesn't mean that every use case has to be dealt with on day one. But what it does mean is let's see what we can do within a relatively short period of time that can get a, you know, whatever we're going to call it, whether it's multilateral agreement, but whatever it is, get something out there that's a working prototype or pilot that we can all learn from, so we can then scale up. Because what we often try to do is solve every single question on day one. We can't solve every single question on day one, and let's not try to. We don't even know what all the questions are yet. So let's get something out there that we're all comfortable with. And the good news here is we have the backing of regulators, so that if we need a bit of support to get this through, because there may be, and we don't know yet, a slight inconsistency with what it says in the PSRs or in the FCA approach document, with regulatory support, we might be able to smooth over some of those issues while we prototype and pilot something that can actually start the road towards launching VRPs for many more use cases and many more consumer benefits.
And that's going to be an advantage to what I was saying, you know, in my opening at the top. You know, the world looks, you know, for open banking, they look to the UK to see what we're doing next. So if we can work collaboratively, and that's going to be the theme of my last question. But before we do, I would like to a bit of a direction to the panel. I'm going to start at the bottom of these questions, and some we've answered, but it's, you know, we've got a large audience and a very engaged audience. So I want to start at the bottom and work up. So it's more of a statement than a question, but you've had a shout out, Tom, so I'm going to shout it out so everybody can hear. Spot on from Tom at Go Cardless. There you go, Tom. You've got a JROC direction of travel is great, but couldn't we have done more in the 18 months ago? Does anybody have any comments, or is that, well, it's happened, let's move forward, let's have the momentum and lace up our trainers and get going? And that's exactly what I'm going to do. On to the next question. Okay, question 10, because I'm going, as always, nice to see NatWest leading the way. Any other CMA 9 and other ASPSPs, I always struggle with that one, on the call. PISPs can't launch customer propositions if there's only one active bank. Well, Rafe, let me pass the mic to you, because you, on our last campfire around VRPs, you did a shout out. You said, come on, other banks, join the party.
Yeah, we need other banks. What I'm saying here is that so I think when I say we, bank, PISP, we all have a duty here on start to shake the tree and accelerate stuff. So what I'm trying to say is a collaboration. Even if we are the only bank, I guess we'll accelerate the delivery. So I appreciate the frustration. NatWest is just a portion of the market, but we have almost 10 million of active current account. So it means that even by just working with NatWest, potentially the reach of VRP can cover almost 10 million customers. So again, it's a percentage what we have. It's not the whole of the market, but it's still bigger than other payment methods. So I would say, come talk to us, come talk to the PISP. The door is open. We want to make it happen. If we start to collaborate, going live and show that this can happen, this will push other banks to join.
Right,
Helen,
to you, there has to be a first. Go for it, Dawn. Yeah.
Thank you. I just wanted to interject there to sort of encourage the other ASPSPs to come forward and start proactively collaborating more, because, you know, we've seen in the last year, you know, the Amazon effect, where they turned off Visa's cards for a period of time because they just didn't want to tolerate the high, interchange costs. And so, my message to the ASPSPs is don't kind of bury your head in the sand, because you will get these bigger merchants who will, carry out their threats like that, and it will be sort of too little too late. So get involved now.
Oh, good shout out. And it is about creating market momentum. There has to be a first. You have to drive it forward. Go for it, Raf.
And sorry, I think on the back of what Don said is, so the fundamental point of VRP is that VRP will cover customer needs. And if banks don't start to look after their customer need, we might lose primacy. So I think it's important for us to play into this game, because this is what customers are asking for.
Good point. Okay, let me just move on to another couple of questions. Here's one. It's a leap of faith for TTPs to forecast and innovate with little sense of the cost of goods, in inverted commas, for VRPs. Thoughts on timelines? Anybody on the panel want to have a go at that one?
I can give you a sense of the report timelines. Like I said in the beginning, we're really keen that this moves forward quite quickly. In terms of reference, we say Q2, really what we mean is very early Q2. We're in Q2. To then actually look at a sensible delivery plan of really rolling out non-sweeping VRP by the end of Q3, for that to be delivered back to the JROC, so that we can start piloting something, to Ellen's earlier point, before the end of this year. What we don't want is lots of collaboration, collaboration that doesn't lead anywhere. I think to an earlier point that you called out, Helen, there's been lots of talk on VRP, on open banking more broadly, for the last 2 years longer. This year, to the minister's point, is really where that switches to collaboration that has concrete actions and deadlines and deliverables.
Purpose and direction. Okay.
Just very quickly on that, it's absolutely super to hear, and I think it's totally commendable that the JROC report does have that sort of accountability and it built into it, and it does talk a lot about how JROC will hold itself to account, as well as all of the other market participants here. So if this is an industry-led working group, that's one side of it, but the gaze of the regulators and the government is going to be on this working group, and it's very clear to me that that's going to remain to be the case. And so I certainly expect there to be goodwill from all participants to be driving this forward at pace.
Tom, whilst you've got the mic, there's a question here, and then I want to wrap up with a final one. Should ASPSPs conform to a standard charging framework for non-sweeping to allow third-party processors to have a sustainable model? Do you have a view on that? Or does anybody have a view on that? I
think this is really difficult to bottom out. I think that, very clear that the commercial model needs to be sustainable. I think that, NatWest, absolutely commendable, have come up with some initial ideas in this space. But, you can look at different sort of proof points based on different metrics and different reference points, shall we say, for how this should be built. The clear thing to me, and perhaps again kind of goes back to something that the PSR, Kate Fitzgerald, actually referenced in a speech yesterday, which was that account-to-account payments need to become competitive against all other forms of retail payments, and that includes on the pricing element side of things. Exactly what that looks like is maybe too early to say, but it's very clear to me that it needs to be utterly competitive and compelling.
Does anybody else have a view on that? Sorry, I didn't mean. Does anybody else have a view on that? And we'll take one last question and then wrap up. Yeah.
I do. So I agree with all of you. Need to be competitive. But I think when we talk about competition, let's be careful that, especially when it comes to small merchants, what they pay 2-3%, the bulk of 2-3% is not interchange. So interchange is just a smaller portion of that one. So I think it's easy to point the finger against interchange, but in some case the payments are uncompetitive, and not because of what the bank are getting.
Okay, I am just going to give you one more audience question, and I do have one of my own for the panel. And here from the audience, how are the third-party processors proposing to ensure that VRP propositions do not appeal only to the sophisticated users and are accessible to the average user of payment services? Maybe one for Dawn and Jana, or
yeah, maybe I can. Sorry, Dawn, you're going to go on.
I agree with the person who raised that question. You know, I think my natural concern is that, you know, when you're presenting a customer in their mobile banking app or in their internet login with a series of criteria of, you know, what's the maximum amount that you will allow this merchant to collect, how frequent, you know, you want to, you know, all that pressure and stress on, you know, getting that right, because they don't want to, you know, be out of pocket. They don't want to have misunderstood, you know, those criteria points. So I think, you know, responsible as responsible lenders have to do. I think we all have to again, going back to the duty of care to the customer, I think we need to all in this collaboration come up with a simplistic way and a universal way of presenting that consistently to account holders, so that they don't get overwhelmed by all those choices and all those criteria and just not do it.
well said, Dawn. Jana, please.
100%. And I think all of this is going to depend on the use case, right? There is a simple e-commerce use case where I'm just saving my account on file in the similar way I save my card on file. But in the case of VRP, all I need to have is maybe one mandate parameter, which kind of mitigates the risk of kind of black swan event when somebody takes up 500,000 of my account. Not that I have 500,000 on my account. And so in that case, you would just simply present a user saying, this is the maximum amount you will be able to charge on this payment method when you are transacting with H&M. And then every single time you go, and then you have a single point in your bank where you can cancel that mandate, and you can revoke that trust with that merchant if you need be. Then there are different use cases like the saving accounts where you might want to set up the parameters yourself. So again, VRP is a great method when you are really start thinking about the use cases. And then from the usability and simplicity for the users, we have been running in TrueLayer account-to-account payments, open banking payments for some time. And we have done a lot of research. This is very kind of natural for customers. People are very used to authenticating things with their banks. They have all in coronavirus downloaded the banking apps. They know how to do Face ID in there, and they have that trust. So I actually don't think this needs to be confusing. We just need to cater for each use case in a slightly different way across the industry. So again, to your point, this needs to be like how I'm doing my H&M payments or my e-commerce payments with Barclays versus NatWest versus Lloyds needs to be consistent.
Well, you've just mentioned Barclays, and let me just say, because the panel can see, Dave from Barclays has been asking a couple of those questions, and he's really enjoyed your session. So thank you. I want to wrap up with a couple of questions, and I want the panel each to have an opportunity to answer them. So 2 quick fire questions at the end. We've talked a lot about collaboration, and we truly do have an engaged ecosystem. There's a lot of questions coming in from the audience, and I'm also getting a lot on WhatsApp as well. And apologies for everybody that we're not being able to answer them all, but I promise you that we will come back to you with them. So let's talk about collaboration, because it is a phrase that we've talked consistently about through this panel. What collaboration is needed, but is not happening right now to make things happen? I talk about lacing up your trainers. Marion King talked about market momentum. Raf, what do we have to do?
Is what I was touching earlier in the Fireside. I would say coalition of willing. So we need probably just, every bank is welcome, but a couple of banks, few PISP, the regulator for sure, and let's try to crack on. Let's try to start from a white page and open the door when we have an agreement on liability model.
Well, I'd like to interject there. The JROC report explicitly says that it's going to be fair, proportionate, and have a strong regulatory direction. So where is that strong regulatory direction to get everybody together and not dictate terms, but encourage those terms? Because this 2 years can't go on. But beyond this, we've got to go to market. We've got to do education.
We hear you, Dawn. We hear you. We hear you. We absolutely hear you. Owen, it's your opportunity. Talk about collaboration and answer some of Dawn's points, please.
Andrew. So I've spoken about it before already. The direction will be on setting up a VRP working group that has clear terms of reference that will come out in the very short term. On your point on collaboration, though, Helen, I don't think this isn't something that happens already, but just to give you kind of a teaser almost of something that's very likely to be in that terms of reference. You can't have proper ecosystem collaboration if you don't include consumer and business representatives. They're ultimately the ones that will use these VRP as a product, and therefore their view should be very much represented when we think about rolling them out further.
And as a regulator, I would expect you to do just that, to have the consumer and their protection at the heart of everything you do. Tom, I know this is a point that you have a very strong view on. Please, let's hear it.
Look, I mean, we kind of spoke about this a little bit before, but yeah, I think all participants need to be involved in this. We have all had skin in the game. We have participated in the SWG process, which was fantastic. Great work by Alan and his team. Yeah, I think we're excited about the next phase of this, and we do think that people are approaching it with a very positive, constructive mindset. And it's just important that we keep that momentum going. And the worst thing that can happen, though, is for one party to suddenly start backing away from this process, or for that momentum to be lost. I really hope that's not the case. I don't believe it will be. I'm an optimist about this. I do think that the minister's been super clear about his objectives, and that percolates all the way down through the JROC report, talking about accountability. And I do think that it's great that Jeroen and his colleagues as well are just going to carry on with that sort of their gaze on this process to make sure that we stay on the right train tracks to getting where we need to go. And then let's try it as well. Let's get it done. The multilateral framework, let's get the principles of this sorted before worrying about getting it absolutely bottomed out. Version 5 can be the answer, and in 2 years, but let's do version 1 this year.
Couldn't agree with you more. Alan, the last person I want to pass the mic to before we say goodbye. Collaboration, comments on what you've heard today. Please help me start to wrap this up.
Yeah, no, thank you. And I think, just to echo what a number of people have already said, that we don't want a talking shop. We don't want the VRP working group to just be lots of people chatting. We want people in there that are committed to building out a straw man that we can then work off to see how we can go to the next steps and pilot or prototype, whatever we're going to call it, something that we can go out to market. And to Raf's point, if we haven't got everyone prepared to sign up to that, it doesn't mean it doesn't go. Getting everybody to agree to everything may not be possible. It's great if they do, but we need something that is good enough to put something out into market. And you don't always hear me say those kind of words, but if we're 80% of the way there, to Tom's point, version 1 may be the right answer, because we'll learn as we go. We're learning with sweeping. I think let's not forget we have got sweeping VRPs out there. There's a lot we've learned already. We're learning actually that people are using VRPs for sweeping as a form of delegated authentication, but that actually the TPP is effectively authenticating payments before they're made through the VRP mandate. And we didn't expect that to happen, but that's what's happening. So we're seeing innovation, and that might direct, change to the standard, change to the rule set, change the agreement. So let's not think we can boil the ocean and solve everything in a day. It is something worth doing. And I think the other thing is, back to my talking shop, I think we do need to think about how we convene people to make this work effectively. And I think what we've seen with the SWG process is convening effectively can be the right thing. It's not about people joining a working group to sit there and take notes and throw rocks. it's about having a working group where people actually do collaborate, provide input. And what we've seen from NatWest with their template agreement, what we've seen with TrueLayer with their report on Monday, we've seen valuable input into this debate that we can build from, you know, and let's see if we can use those inputs that have already been put in place to see how we can get going on this and move forward really, really quickly.
With that momentum. So collaboration is absolutely key. I am going to wrap up. I have looked at my WhatsApp and I have got 40 questions. So if I worked through them all, I will give a shout out to Paul Rogers, who is saying he's loving the Campfire. And Paul, you've written me such a lot. I haven't got the opportunity to read it. It's like an essay on how wonderful he thinks you all are doing. But clearly with 40 WhatsApps, you know, you can see the panel questions. This is the hottest topic in the industry right now. So let me thank everybody on the panel for being so generous with your insight. And what we will do is over the course of the rest of this year, we will be following this JROC story. Of course, we will ask all the panelists to come back again and to comment, but we will also be asking you if you have the time to write a blog and to keep this conversation going. You can see that everybody is wanting to learn. I think that's absolutely key. What we will also be sharing this session on YouTube. I'd ask everybody to share that and to follow us all on social media too. So all that remains for me is to thank my team, the OBE team, who are absolutely wonderful. A huge amount of effort goes in behind the scenes to make this happen. And I would like to thank all of the audience for their great engagement. And we will be posting the results of the Slido poll on LinkedIn. So thank you very much and wishing you the very, very best of health. Thank you. Bye for now.